Good morning, good morning, good morning. We're going to go over to YouTube and monetize this mofo. YouTube. I got a lot of stuff today, too. I didn't have a lot when I got on, but we got 8:30. We got jobs numbers coming up. YouTube Studio. We're going to go over to content. We're going to go to live. I don't know why. I need to figure out how I can do this in, or at least a countdown, so I don't kind of show this stuff, but I don't care if I show it. To be honest, who the hell cares? Who the heck cares? Trying not to. I watched Hard Knocks last night, and one of the things that irks me is how much the head coach of the Dolphins just overly curses. Okay. Morning, Nevin. Hey, if for some reason it says Kevin in a newsletter, Nevin, whenever you ask me a question or something, it's autocorrect. I know your name. It's perfectly fine. Let's not get crazy. We got jobs numbers coming up too. But I'm going to do some scans before then. Markets are up here. I just need to get rid of this. People have been writing to me. Let's see. Seeking Alpha. Oh, here we go. That's not going to take it. Let's see. This is the... So now I'm part of this group. Congratulations and welcome to Alpha Picks. Let's start by quickly exploring your brand new investing service. This is a new feature this is a new service by Seeking Alpha. I'll go over it a little bit here. You're going to see my welcome. They invited me. I'm not supposed to show it until, I guess, February 8th, but they have had just their returns are crazy. But let's see. Each valuable investing insight published by the team can be found here. I guess that's it. So, yeah, we're going to be able to start showing this on, let me see, what are the notes? February 8th. So about a month away. They want us to start showing it. I don't think I'm supposed to start showing it now, but it's an add-on. So I still am trying to clarify. I think you need to be a Seeking Alpha Premium member, and then you pay for this group. Their performance has been, I mean, you know, the performance has been, so this is over, let's see, starting July 1st, 2022 is based on buying every alpha pick on the pick date using the opening price. This also includes selling picks which are displayed on the remove tab using the closing price or the sell date. The S&P for performance is calculated by starting the July 21st. So they're doing it in even fashion, where it started on July 1st. They make 73%. The S&P makes 25%. That's since July 2022. So it's really, really good. We can see Jackson Financial was recently taken out. Not too much taken out over the time. You know, the Travel Centers of America, Chevron was taken out 5/12/2023. Great move. Nucor, 7/24/2023. Great move. ConocoPhillips, August. They got out of energy. So Suncor is, I think that one kind of went down. But the return was 0.21 versus SPY was 2.76. Jackson Financial, they made 8.2. You can see they made 30% in ConocoPhillips. The S&P made 21. They made 59% in Nucor. S&P made 20. Livent Corporation, they lost 30%. It's an interesting kind of tool. And if you're just tuning in, I am not a big fan of stock picking services, but something that returns that amount is crazy to not take a look at. So I'll be taking a look at it over the next month until I'm allowed to show it on screen. And my assumption is I can show it on screen. We'll see. But they want us to start highlighting the picks. So, and I don't mind doing that. That's what I do for my my own personal thing. So if they want me to start highlighting the picks that they make, I'm all for it, because that's what we do here. We find stocks that are good picks, and I'll give you my honest opinion of them. Just know I am a douche on the internet. So, yeah. Let's see. She says you can get Seeking Alpha picks on its own. Interesting. So I'm still learning about it, but I will have to include a link to that. So, we'll have to include our affiliate link. Did nothing in the core portfolio cross up yesterday? Wow. It was a shitty day, but I would have thought something would have. No, brokerage holdings, nothing. Core investments, let's just scan it again. Nope, nothing. Let's look at covered call ETFs. There's got to be some inverse. Energy names. Energy was not doing well. Nothing. Levered ETFs. Oh, there we go. PSQ. SQQQ. FNGD. So SQQQ crossed up. Yeah. I am not getting into that one. No. I still think we make the downward trend. So FNGD is the FANG index. Yeah, minus 3 times levered FANG. Inverse FANG. So interesting. Low cost Vanguard, anything from there? Nope. Usually wouldn't do anything. Spider sectors, nothing. Let's look at the not owned, because DraftKings had a really good day. We have NCLH. This is Norwegian Cruise Lines. Coming up on a, look at this chart. And I've got a great question, by the way. One of Highway asked, how do you determine the price target to buy into a stock? Do you base it on 52-week high, low? I know you look for confirmation. I understand that. But when certain stocks fall, you have mentioned that such and such prices are a good buy. Appreciate your feedback. Buy at or under is what I'm talking about. Completely understand. I'm going to put that in my list for okay. Let's see, we're going to take that. Okay, sorry. Scans, HLT. This one's interesting. Okay, so here's Norwegian. Take a look at that MACD crossing down, RSI heading down, volume heading down. We hit the 200-day. MACD starting to cross up. You don't have confirmation. If we just pull this back to this gap down on earnings from the last time, we're going to pull this back to the gap down. Let's see how many people bought in before the earnings right there. You're looking at a volume support level at about 16. So, but the biggest one is right here at about 1680. And you're trading in pre-market 1726. Heading into earnings. That's an interesting one. I'll put that in the list. That's my not owned list. I don't share that one. There's a list of names that just kind of get added, deleted, just that I've traded in the past. KDP. Let's look at the S&P. And then I'll open up. Okay, nothing there. Going back to the strategy tester. And I'm going to take a look at some of the core portfolio. So here's got you out with a 31% gain. You could have gotten out with a lot more up here at 20. As it started to slide and you lost confirmation there. But solid play. I mean, if you take a look at a long term of this one, we rejected off the 200-day. So it's an interesting one because the 200-day is just about 20. So that's probably where you're looking to go. And their problem is just debt. Just debt. I'm going to be way up today because Apple's up 2%. Amazon's back up over 150. Boeing at 205. If you didn't get it under 200, just buy it at 205. Bank of America, up 0.16. That one's a little bit tough to say buy on that one. Cleveland Cliffs. Nope, no confirmation. Do not buy that one, even though the MACD's about to. Here's a good example. Morning, Mike. Good example is right here. MACD. Probably going to cross up. The RSI is down at 30. Do you want to buy it here at 1795? Nope. I would probably not. Let's see. I know this stock had a spike. Yeah, here we go. We're going to bring this volume back here. Oh, come on. We're going to bring it back here to where it was trading at about 21, 22. And you can see when people bought in, they sold out. And so your support level for volume is about 1690. You're trading in pre-market 1795. This is the largest shelf right here at 15. So if we just do auto fib and we reset, okay, take a look. You're trading right here. Your support level is going to be about 1719. So you're at 1795. Yeah, that's an interesting one. Costco, I said buy it under 600. God, it never made it under 600. You had this, that's 669, great price. They're just continuing. Disney, hopefully you got it under 90. I think it's fine. Devon and other energy may come out of the core portfolio. This just has, the energy there's nothing to it. This is FBCG. This is the blue chip growth from Fidelity. It's been a solid investment. Got you in at 33.28 over the past 24 months. It's up 12% in the algorithm versus 6% for the asset performance. Google under 130. Be able to buy this under 130 again. This was way back here. Listen, when it got under that 200 day, I said, if you don't have a position, just start it now. Just dollar cost average your way in. Goldman Sachs at 377. If you've been listening to me for a while, I mean, even October, where I said it got down to 301. Because when you looked at this, and banks are like this, you want to look over here on the left-hand side of FinViz. You look, the book value is 313. That's what you would get for this company if they just sold off, like, hypothetically, sold off all their assets, $313. So at $300 back in November, God, buy it all freaking day long. Coke, I continue to say under 60, you can get it. You don't have much upside here because I do think that 60 is probably, I mean, look at that volume shelf right there, right at about 60. Everybody's buying at 60. Eli Lilly, I think under 600 is a fine long-term value at this one. It's at 629. Meta, just buy it. I mean, that's the long-term right there at 380, but they're just going to print cash in the political year. MPLX, it's energy, but it's held up for energy. And this is what's interesting about this one. They're just putting off cash, and they're holding up. I don't expect it to go up. It hasn't broken down like every other energy, and it's got as of this, when I printed this, I don't see any reason to get rid of this in the near term. So Microsoft, it's going to be a $400 stock at $392. It's continuing that. This green line is its track to 600. So anytime it dips below that green line, I like it. Netflix, God, they just licensed inside the NFL. They're going to kill it. NVIDIA, this one, solid. God, what a great company. Get it under 500, though. I don't know that it's going back to 500, but it's been trading between 400 and 500. It's putting in a nice shelf there. I said, 266. Oxy, Warren Buffett owns it, but it's kind of like Devon. Energy's just been a shit show. PanW, if you can get this under $300, you buy it under $300. Cybersecurity is just killing it. Pepsi, I think the price was $170. I said you can buy it under. It's $165. Palantir, I've got a couple of shares of this at $18.50. I hope to get up to 20. If it goes down that gap, I will dollar cost average. You can see the gap down here to 15. It hasn't filled it, and we don't have confirmation. It's up 2% today, 16.75. You might have confirmation, but the algorithm hasn't gotten you out. The algorithm for this one loses you 18% versus buy and hold makes you 7%. So the problem is the algorithm, when I say it doesn't work, it's lost you so much money over this because you can see those candles are just messy, and it's just a messy stock. So the algorithm works on older stocks that have good upward trajectory because it's based on a MACD. And for those of you that have TrendSpider, it's just a tool. You can customize it however you want. Qualcomm, Taiwan Semiconductor killed it. So your chip stocks are going to soar. QQQ, I'm in at about 408. It's at 410 right now. You're just going to gain back. I mean, here's what you're seeing in the Qs right now is you're just seeing kind of capitulation here in this range. So if that's the range that we're going to trade in, yeah, shit. My insurance rates, I have State Farm, and my insurance rates have just gone through the freaking roof. Jobless claims. God. Is the market crashing now? Yeah, the Dow just crashed. NASDAQ hasn't crashed, though. Why did the Dow crash? That's got to be one stock that's pulling it down on news or something. Bond Yates rates. So jobs just came out. Okay, hold on. Let's go over to Seeking Alpha. Oh, I'm going to pull. Oh, what happened? We're going to go from plans of pricing. No. Seeking Alpha. And we go to Alpha Picks. That's what I wanted. Welcome to Alpha Picks. Done. Okay, jobless claims. Shorts are feeling the heat on these stocks. News. Where is the news on jobless claims? It's been 5 minutes. Home. Articles you've read. Palantir, the dip is a gift. CrowdStrike, stock with a huge upward trajectory. No, I don't want that. Latest news, let's see. Housing starts fall. Eagles. Cancer therapy. See all news. Wah, 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 wah. Housing starts fall while building. Initial jobless claims drop more than expected. Yes. And we'll just copy and paste this. I don't need an article on Seeking Alpha. Copy. And paste. TSM. Larry, TSM had killer here. Here's the article. Taiwan Semi rose about 6% in pre-market Thursday after the company forecast more than 20% growth. I mean, it is what it is. Taiwan Semi, if you want to buy into this one, I don't think it's a horrible. It's too late now. I would not buy into this one right now. I'd probably take a look at some of these other semiconductors like Qorvo, Tower Semiconductor, not a bad one. NXPI, NXP Semiconductors. I think they're subject to auto. Might be a good one. Intel's an interesting one because the quant rating has a 3.49. Seeking Alpha analysts don't like it. I like Intel. And the reason I like Intel is because I still think it's a turnaround story. And wow, SMCI is up 4%, by the way. Here's Intel. Now, it's weakness, so I wouldn't buy Intel into this weakness. Because you're crossing the 200-day. You've got volume shelves that just don't support this buy right here. Let me find the volume. There it is. We're going to bring this back. Let's see where everybody's holding from just after the last earnings. Because we've got earnings coming up. So after the last earnings were announced, where are you sitting? Because you had this nice gap up here. The large majority of people have been buying up here. Now, the next level of support is 43. Do I think you buy at 46 or 43 before this earnings? I think based on Taiwan Semi, this is up at 46.95. So you're up in this area. This shelf is going to start building, and that's going to be your support. You've got a gap up here at about 49.50. I think Intel is a better buy right now than Taiwan Semi. And it's just an earnings play. It's a gamble. It's a risk. But I think, Taiwan Semi is up 7.8% at 110. Let's see in the long term where 110 is on Taiwan Semi. 110 is up in this area right here. We're going to put a line over there. 110. 110. We're going to put a line in here. 110. Okay? It was rejected last time right here in June 2023. So, in order to get above there, you're going to have to create some. I mean, here's the volume shelf right here from the highs in January 2022. I can even pull it back, and let's say 2021, February 2021. And let's do January 2022. That's when this stock had its high. It hit the high of 145. Do I think that it's getting back there on this? 20% growth projected is a solid pattern. But you can see, look, it used this as support kind of to bounce off in the previous, two kind of bounces back there in September 2021. It used that as support to go through. Then it broke down. Old support becomes new resistance. I mean, here, we're going to bring this even back here. And we're going to extend this out. Look at that clear support where it was bouncing off there and then clear resistance. So, you know what? I like this chart. Hold on one second. I'm going to go back. I'm going to type in some notes on this one. Oh, I must have hit something that I don't even know what I hit. Let's type in some notes. Bum, bum, bum. There we go. Okay, we're going to use that. Dun, 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 because I do like Intel for a play before their earnings. Well, I should say. Okay. I mean, just chip stocks are going to soar. AMC, all-time high. Or, I'm sorry, 52-week high. Let me see. What did I put down? I do have a AMD. AMD hits at 50. AMC. So let's go to QQQQ. That's going to store there. We're going to look at this one. I'm gonna redo this. There you go. I think that's a good note. I do think that this is a good note. And let's, if we pull back to the July high, the July spike, which was the end of July, really. Let's see where everybody's holding. Okay, we'll do that one. Let me open up my stuff. Okay. I'm gonna open up. We're gonna. Who wants a short squeeze? Apple upgrade, DraftKings, Etsy, plug. I really like this list from Shea Boulor. And I like this one. And Humanist Slides. Probably not super exciting, but we're going to put that one up. Biggest winners. And we'll pull up this. Yeah, this is the group. Okay. Home. Okay. Morning, Chris. Morning, Larry. I hope everybody had a good hump day and you got humped. Humpity hump. I'm going to start this podcast now. Okay. Good morning. It is, you know what? I don't like that. We're going to start because I got to put myself in here. I think my housekeeper moved my camera. Okay. Now we start it. Good morning. It's Thursday, January 18th. I hope everybody got humped on hump day. We're looking at the Qs, but before we look at the Qs, I want to point something out. I just got an email from Seeking Alpha overnight. I guess I'm part of this now. They started a new investing group called Alpha Picks. This is based on the quant stuff. And so I think they're going to allow me to show it on February 8th with some feature, the new picks that they do. But I wanted to show it. It is a subscription service. You guys know how I feel about stock picking. But here's the difference. And this is what I really wanted to show. Was in the 18 months since launch, the service has generated 2.7 times higher than spot, the S&P 500. You can see it Alpha Picks is 73%, S&P is 25%. They go over the exact stuff. Here's some of the stock. I mean, we can look at the picks. PepsiCo is in there as of 116 just a couple of days ago. Modine Manufacturing, My Homes. I don't think I'm supposed to show this, so I'm going to leave it a little bit off. But I will include an about in the newsletter, in the free newsletter today. And you can see the performance here, 73% versus 25% for the S&P. That outperformance makes it worth my while to kind of bring it to you. I know some people like the texting services, and the Jim Cramer has his own kind of service. I think this is interesting because they not only give you, this is the team that's actually picking the stocks. They not only give you this, but they give you analysis. So every time they do some type of pick, it's got featured analysis. So I really, really like the service. I don't have much about the pricing. I think it's about $99. I was told that you don't need Seeking Alpha Premium to sign up for it. So it's an interesting look because you guys know I've been using the quant stuff a little bit, and I really, really like it. But yeah. What did we get today? We got initial jobless claims. Crazy good. The job market strong. Jobless claims went down to 187 versus an 187,000. That was minus 16,000 since the last week. This the expected was 207,000. Continuing claims 1.8 million versus 1.845 million expected. It's all good. And so when the job market's good, the Fed, this is the note that I put in. We're range bound right now. So when you see a down day, expect an up day. When you see an up day, expect a down day. The MACD crossing down. The RSI in no man's land at 53. Yesterday we were at 47. It quickly moved down. I would like to see some more certainty in the market, but I just don't. You're seeing a volume shelf created right here on the Qs at about 403. There's no man's land here between 403 and 390. So we might go down just as much as we might go up. The Bollinger Bands cinching up. You know, this range right here, I'll put this chart in the newsletter. But right now, in my mind, if you wanted to make money, it's not in the indexes. It's in the triple levered ETFs trading on a short time frame. It is on investing for the long term, or doing something, finding out what works for you. For me, you guys know I'm in TQQQ, and I haven't been trading it, but I probably will add some today. Ironically, SQQQ in the algorithm. Got to cross up and you're in on SQQQ. I just don't think that's the right move. I was nervous and I got out of it with a slight gain last week, and I got into TQQQ. I think I'm into TQQQ at $50, $50.20, somewhere in that neighborhood. It's at 50, 55. You're up 2% on TQQQ. There's a lot of news that happened today. Most active stocks. Taiwan Semi is up 4%. I just did a chart on Taiwan Semi. I will include this in the newsletter. We'll go over some of their earnings. But Taiwan Semi is one of the biggest. It's because they had earnings. They're up 7.64%. I think they've been up to about 8%, maybe 10%. But what I wanted to look at was here on the weekly. And so should you buy into Taiwan Semi? Taiwan Semi is in the core portfolio. It is a solid stock. This is a great company. They manufacture all the chips. The problem that you have is political. China has said they will take back Taiwan. In the algorithm, you make 13% versus buying and holding Taiwan Semi, you lose 24%. So that's over 2 years, by the way. There's 31 positions, so it's a little bit more than just once a month. You can see the volatility on this. As you're rising here, this is why I say it's a good stock. You're going back into the rising. The problem that you have is the volatility. You do have a volume level up here, shelf at about 116. But look at back here between 2021 and 2022. You had a clear support level where you kept bouncing off of it. Then in 2022, you broke that level. Well, I always talk about it. Old support turns into new resistance. Well, new resistance, old resistance turns into new support. You have to flip this. In order to buy this stock, you have to flip this. You're trading in pre-market at 110. That's where this yellow line is. And you can see back here in June, that's where it rejected off of. So right now you got a positive moving 50-day. You have a positive moving 200-day. I don't think this is the way to go. I think if you go over here, this is the article that I'll put in here. Taiwan Semi stock pops after 20% growth forecast for 24. Second Arizona plant sees delay. Ignore that. But down here on Seeking Alpha, it's ranked 11 out of 65. The note about Intel is because take a look at this. It's number 8. So right now, as far as the quant rating, Taiwan Semi is number 11. It's got a 3.45. Intel, not a great 3.49. But why do I like Intel? The reason I like Intel is because when you look at the chart, they haven't had earnings. They are up 1.91% at $46 today. But you're seeing that pullback right here. And when I pulled this back to the last, after the last earnings, or 2 earnings ago, you're seeing a volume shelf right here at about 46. It's right there, 46.93. It looks like this volume shelf will start building. Right before this earnings, you have a gap up here at 50. You're trading at 46.90. Could you get to 50? I think so. Look at this major drop in the MACD. Look at the RSI going down. Do you want to time this? I don't know. I mean, again, if you're looking for a long-term play on Intel, I don't think it's a bad price to buy it here. You're just going to have to understand that you just held the 200-day. So if you, I would put your stop losses at about 45 and hold them tight here, because that's where the 200-day is. The 50 days moving positive. You have confirmation on the weekly. So while I say before the next earnings, I don't think it's a bad play to buy this one under 50. But that's how I use the tools that I have. This is how I use Seeking Alpha to find opportunities, and I use the charts in TrendSpider to actually discover it. Hertz, they surge 6% following an upgrade by Morgan Stanley. Discover Financial, horrible earnings. Financials probably are going to see a hit from this. It was basically the credit losses. Horrible. I want to point out Plug Power. We talked, I think it was maybe a month ago, somebody asked me about Plug Power. And Plug is a great example of some type of retail hype. Everybody said, well, electric vehicles, they've got to come back. Well, yeah, Plug Power, I own an electric vehicle. Plug Power is absolutely freaking useless. It is a useless company. And you can see it's just fell right here. It's falling again. Why? Because they need more money. When you go to the financial page on FinViz and you type in Plug, they are losing $949 million. They have less than $1 per share of cash on hand. How many shares do they have outstanding? 590 million. When you're losing 900 million and you have 590 million in cash on hand, you need to raise money. So they announced that they are raising money. They are down 16%. I have said every reaction in the market is an overreaction. This is not worth taking the chance on an overreaction. Just not worth taking the chance. But it's part of the biggest movers today. Another big mover, Humana. Humana stock slides after cutting profit outlook on higher medical costs. How does that relate to us? Well, UNH is one that I've said, buy it under 500. I think you're good buying it under 500. I sold at 560 up here. I sold out at 560. I didn't think it was worth it. I said, we're in this channel. I think once we get to the top of this channel, I'm going to sell it. Didn't wait. Sold it in December at about 560. It might have been 550. But I sold out. I sold out and I just used the profits. I knew it was going to come back. Medical costs are causing these stocks to actually lose money. They can't make as much profits as they had. Humana clear. And UNH is traveling for that. Keep an eye out because UNH right now is trading at 502. I am going to start another position in this. My guess, we get down here to about 490 or so. We might even go down further. I mean, that MACD's not super strong, but this is best in class of the managed healthcare companies. It is the largest one. Now, I don't listen to my algorithm too much on this. I want an entry point that I'm comfortable with confirmation, and I want to understand that the stock is going up. They've already reported earnings. There is no need to rush into this whatsoever. But Humana, with that, yeah, you just want to kind of take a look at it. But those are the biggest stock movers. We talked about the top semiconductors with Taiwan Semi. We talked about Humana. What a fantastic thread for any text investor. Shea Boular is just a master at some of this stuff. He outlines the 10 tech stocks with the highest operating cash flows over the next 12 months and explore the competitive moats of each. Broadcom, Cisco, Nvidia, Alibaba, TSMC, Meta, Amazon, Microsoft, Google, and Apple. All of those, absolutely everyone except for Alibaba and except for Broadcom and Cisco, which probably Broadcom and Cisco deserve to be in the core portfolio. But I do think this is a great list. Broadcom probably deserves to be in it, but I just, again, I don't alter this stuff a lot. So I like to kind of keep it semi-strong. But yeah, the 10 stocks. Here are also from Shea Boular. You should be following him on Twitter. He's got some great ideas. Relative strength in the market right now: Datadog, AMD, GitLab, PayPal. We'll talk about PayPal a little bit because I saw an interview with the PayPal CEO last night on CNBC. I liked what he's doing. And it's up 1%. I do think $60 is kind of the pivot point on this one. So it's over 60. If you bought it in the 50s like me, maybe you could take some profits. But I do like what he's saying. Now, their earnings are coming up. They have a product day. I think he said February 25th. He said he's going to shock the world. My guess, he's going into buy now, pay later. I think they're going to launch some new product. It's super, super exciting. I do think that's an opportunity for you to get into. Do not go into a heavy. I am in it heavy. I regret I'm in that one in Square heavy. I'm dollar cost averaging my way because it's in some retirement accounts. And I do think that these things they're expensive stocks, but they're just beaten down. So PayPal's one. If you want this list from Shea, I will put it in the newsletter. Now, Apple. Apple is up in pre-market, and it's up 1.9% at 186. I think it's clear. In my mind, I think 180 is your absolute bottom on this one. I think it continues to bounce off. I think Apple is buying enough shares. I think Warren Buffett is buying enough shares. But the Apple upgrade comes with Bank of America. If we go over here to FinViz and we look at Apple, you'll see the average price target is 198. I think 200 is good. They raised their price target from 208 to 225. Apple, for me, is staying 50% of my portfolio. I'm not getting rid of any here. I'm not trimming it. I am looking for another buy opportunity right before earnings. They say, hey, the Vision Pro, solid thing. Solid, maybe a new category for Apple. I talked about a few days ago or yesterday even how I was running, and I think they're using generative AI to describe pictures and texts. I just think that these guys have a handset in your hand for them. They beat out Samsung. For the first time, they beat out Samsung as the top handset manufacturer. So I like it. I like it a lot. I can't tell you that 186 is a great buy. I think you're going to fill this gap up here to 191. So if you wanted to trade some short-term options, there you go. There's the tip for you right there. I'm not doing options. Some people always ask me about shorts. Well, here's some short squeeze stocks for you. VinFast, Beyond, IBRX. It's all here. It's all in this thing. If you want to look at it, it's S3 Partners issued a U.S. short interest recap on Wednesday. It broke down stocks that have some short squeeze potential. So if you want to look at short squeezes, this is your thing. This could be your thing. Let's go to social requests. Willing from Spotify asked me, the newsletter's right there if you want to sign up. Willing, solid and thorough like every episode. You have a clear presentation style that is clear to follow. Could you review SOXL and KR for Thursday? Hold on one second. What are you doing? What is wrong? Why are you taking the blankets off of her? Okay, here. There you go. And we're going to put this one. Okay, good morning, Pavan. Here we go. Okay, Willing. SOXL. Let's look at this one. SOXL is a triple levered ETF on the semiconductors. So I tell you not to invest in it, trade it. I mean, you know, the algorithm loses you 22% on this. You lose 52% if you just had bought it, 2 years ago and held it. You have 32 positions in the algorithm. I'd say wait for an A+ setup. I don't think this is an A+ setup. Down here in November at 15, that was an A+ setup. You were below the 200-day. You had confirmation above that 9-day. If you're trading this, you just have to wait for an A+ setup. Your MACD was well below the oscillator. Right now, you're kind of on the oscillator. You're just capitulating right here. If you want, I would, if you're interested in semiconductors, this is a trade. If you're interested in semiconductors for the long term, I own AMD, I own NVIDIA, I own SMCI. All of those except for AMD are in the core portfolio. Qualcomm. I don't own Qualcomm. Qualcomm is a solid thing. We talked about Intel. We talked about Taiwan Semi. If you go over to Seeking Alpha and we look at, Seeking Alpha, SOXL, XL. And I, again, remember, this is a triple levered ETF. So it's like TQQQ. It's not something that you want to hold on to for a long time. The momentum, A+. Quant says buy at 430. What you really want to look at is, what are the holdings? So you look at this ICE semiconductor index swap. The way they triple levered it is they buy puts and calls, and it's a bunch of derivatives that they buy. But AMD, number one, NVIDIA, number two, we talked about Broadcom, we talked about Qualcomm, Intel, JP Morgan, U.S. Treasury Capital. That's their capital so that they trade on it. Marvell, Micron, Texas Instruments. That's where I would probably look to get into some of these names. And then you trade SOXL and SOXX, to try and leverage your positions. If all of a sudden you can't sell your NVIDIA because you might have a tax hit, but NVIDIA is going down, you could buy an inverse NVIDIA ETF. You could buy SOXS. But that's the way I would play that one. I wouldn't invest in that one. Again, it's triple levered, so you don't want to do it. Kroger, supermarket chain. I think there's some purchases going on. It doesn't get me excited. The algorithm loses you 3% over 2 years. You lose 3.9%. You're in this one at 45 on the algorithm. You do have confirmation. Right now, it looks like you're in a nice 4% bounce. You just crossed the 200-day. Your earnings are coming up on February 28th. If we go over to FinViz and we look at Kroger, it's not expensive. I mean, the PE is 18. The supermarket business is just, it's not great. The margins are horrible. Target price is 50 and you're trading at 46. What I would say, rather than Kroger, if you're looking for something to invest in, you want Walmart. And Walmart, I don't think I have it in the, yeah, I do. It's in the core portfolio. I've said it under Walmart, under 150, under 160, great buy. You've got this gap that you're going to fill up to 168. Just buy it and hold it. Walmart is just one of those stocks that you buy and hold. They're getting into more into e-commerce. They're taking on Amazon. They've got the drone service delivery. I go to Walmart every week. I shop there for groceries. That's what Walmart does, is they bring you in with low-cost groceries, and then they get you with ancillary products. So I like that strategy. I really like it a lot. Let's see. Mike Starkey from YouTube. Rivian and NEO, what the heck is going on? I replied to this one, and you can typically see my replies. I said NEO's all about China. And being weak and potentially EU tariffs on car imports from Chinese manufacturers. Rivian, I think, is just the valuation, but I will add both tomorrow. I mentioned, I still think Rivian is a $30 stock in a healthy retail trade like we saw in November and December. Here is where I think Rivian trades, and I've had this on the podcast before. Looks like I started drawing this back in June, and I said this is a clear channel. Now, whether you want to buy it down here or not, it's a clear kind of, hey, we're in this, and when we start to get a bounce, we might pop up. Here's the problem that you have with Rivian. Rivian is losing $5 billion. They have plenty of cash on hand. They have $9. They have almost like I think $10 billion, $11 billion, and they're only losing $5. They're losing $30,000 per vehicle. The average target price is $25. You're trading at $16. Most recently, just 2 downgrades. This dude downgraded it to $19. It's trading at $16. Your 52-week range is between $11 and $28. So my ideas for Rivian is this is the channel. I'll if you want me to post this in the newsletter, write to me, Mike. I'll post it in the newsletter. But if you're just looking at TrendSpider, if you have TrendSpider, I'm seeing this MACD is going down. The RSI is at 21. In pre-market, you're up 1.55 at 17. So it's going to bring you up here. You don't have confirmation yet. Do I think you should buy it? Maybe wait, until 18 and then sell it at 20. Rather than buy it at 17 and see it go down to 15, maybe buy it at 17, at 18, or on the way up. You don't want to buy it on the way down. You don't want to buy into weakness. Even though it looks like we may turn around, you're never going to time things perfectly. You will just not. And NIO, on the other hand, I have watched that battery swap that NIO does. The cost of that is enormous. I can't imagine that business model works. And you are buying into China, which is just in a shit show of an economy right now. Think of 2007. Would you have bought into that banking crisis? I'd rather buy it 2008 when I knew everything was okay, when I knew the bottom had been put in. So that's kind of where I'm at with NIO. I can't rightfully say, oh my God, this is a great opportunity, even though it's been higher before. Your 200 days at 22 and you're trading at 6. It's just a horrible stock. I mean, it's not making money. It's propped up by the Chinese government, the EU. They're trying to get into the European Union. America, if you listen to American one side of the aisle, Americans don't want electric vehicles. I have an electric vehicle. I love electric vehicles so much better than ICE. I love leaving my house every day with a full tank of gas and never having to go to the gas station. I love the autopilot that I have. I love the fact that when I go into the store, I can leave my dogs in the car and leave the air conditioning on in the summer. There's a lot of benefits for me for having an EV. But NIO isn't one of those that I think you should get into. Target price is $9.86. And if we look at the most recent one, January, downgrade. Bank of America, buy to neutral. You look at March 2023, or I'm sorry, June was the last one. No more. They brought it down from $25 to $7.50. It's just a cost thing. So, Mike, neither one of those is good. Sam from Facebook, and let me point this out. Sam has been a longtime listener. Sam has been a longtime commenter in the Facebook group. He has grown so much, and it's the point of the podcast. He used to say, hey, what do you think of this one? What do you think of this one? No foundation whatsoever. What do you think of this one? No foundation. Sam, this write-up, it should just shows his growth, and he says he's doing better. We don't care. I don't care if you actually pick the stock and you lose money. If you pick the stock and have a thesis, that's what I care about. If you pick the stock and actually make money on your thesis, that's just the reward. But having a thesis and having an understanding of why you got into a stock that's the strategy that I want you to have. I don't care if you follow me into tech. I don't care if you follow me at all. But have a strategy. Sam said, would you mind looking at EATE, Brinker International? I'm still working on my strategy. Looks like it could be a buy. It just got an upgrade. Trading below the target price. Looks like it's trying to get a cross up on the 4-hour chart. What I could find on the seasonality, I think it has okay for the next month. Let's look at EAT. I don't even know what Brinker International is. Restaurants. I'm not a huge restaurant person. Restaurant is PE 12, not horrible. Book value, they have a negative book value. Performance over the year, 2.4%. The 52-week range between 28 and 44. It's kind of in the middle, more on the high end. Average target price is 42. You're trading at 38. Most recently, got an upgrade a couple days ago to $48. If we look at some insiders, they're selling at 41. Not huge. This dude exercised options, SVP. Nothing enormous. The SVP looks like he sold $609,000 worth. I mean, maybe he needed a pool. I mean, it's got a $1.7 billion market cap. They have 44 million shares outright. Let's look at Seeking Alpha. What do they say about this one? EAT factor grades, strong buy, so they like it. It is number 2 out of 44 in the ranked industries. Right now, all the factor grades, except for profitability, is a C. That would make me worry a little bit. But the number 1 is Darden Restaurants. So I think Eat is probably better. Let's take a look at the chart. Because I think if you're looking for a long term, I'd probably like something a little more exciting than a freaking restaurant. We're looking at this one, $30 got you out with a nice 32% gain. I wouldn't buy into this. Not right now. No way. I'd wait for you to get under the 200-day on this one. The algorithm loses you 25%. If you bought and held, you made 10%. The algorithm is not good on this one. So I'm not looking at the algorithm kind of entries and stuff. What I'm really looking at is the chart performance. And what you've done is you've just look at it before COVID. I mean, it just hung out around that 200-day. So I don't think it's a good buy. I think you could trade this one, Sam, but I don't think it's a good buy. Highway Jones, Gary, how do you determine the price target to buy into a stock? Do you base it on the 52-week high low? I know you look for confirmation. I understand that. But when certain stocks fall, you've mentioned that such and such a price is a good buy. Appreciate your feedback. As always, buy at or under is what I'm talking about. I will include this in the paid newsletter. I put it down as my suggestion, but I will explain it right now. And a good example is probably Coke. Coke, I said, hey, under 60, you want to trade it. And the reason is when you look at charts as often as I do and as much as I do and as often as I've traded Coke, you just kind of get used to, hey, $60. I've looked at it before. It was $60. Take a look. Here's a good example of Coke. Okay. When you had the run up right before February in 2020, where did it go? It went to 60. That right there, when you point out 60 and taking a look at it, this is a weekly chart. Okay. You could trade it over and under that weekly. When you run the 4-hour and you look at Coke and that $60 line right there shows up, kind of puts it right into perspective that $60 is probably the pick. I will be perfectly honest with you, Highway. It's just a guess, and it's just me looking at charts. If I were to take a look at, Roblox is a good example. I said, hey, under 40, great price. It was coming back to 40. I knew it was coming back to 40. Look at these volume shelves here. This one's probably coming back down to 32. So anything under 40, but a stock, I always say, if a stock is a fundamentally good stock, doesn't have to make money, but it has to have some type of future in it, and it has to have some type of volatility for me to say it's getting back to that price. As long as a stock has put in a price before, it should get back to there. Now, this one, Roblox, is it getting back to 122? Not in the next year. Not in the next year. It's not making money. Is it getting back there at some point in time? If Roblox is able to turn the metaverse into their universe with, say Apple Vision Pro, Roblox has something with that. The Meta glasses, say they have something with that. Google has glasses. If they are able to put people into the metaverse, Roblox will be back at 122. I just think, take a look. If we just look at this channel, You know where 40 is? Right there. That's about 45. So, you're looking at a bottom at about 25. That's let's see, that's since August 2022. So that's about a 2-year period, almost a 2-year period. If we just look at a 2-year period here, we pull this back to March 2022. That's a 2-year period. It just, when you take a look at these things, you just understand it. And that's why I say, take a look at your portfolio. If you're new to stocks, find one stock and just stare at that chart. Stare at a 5-minute chart, stare at a 10-minute chart, stare at a 15-minute chart, stare at a 1-week chart, stare at a 1-month monthly chart, stare at a 4-hour chart, stare at a daily chart. Understand and read up and look at those moving averages and understand how it moves in those moving averages. It's the simple fact highway. And honest to God, it's just a guess. But you take a look at EAT, and these dudes have an average target price of 42. That's all they're doing a ton more research. And we look at Coke. Coke's target price, 65. They're doing a lot more research into the actual earnings, into the actual future earnings, into the growth potentials. They're doing a lot. I'm just looking at the chart and saying, I think you could trade it around here. It's a simple fact. There's nothing crazy about it. And I don't want anybody to think that I've got some type of formula. It is looking at a chart and it is guessing. This is why I say do not listen to a douche on the internet. It is simply a guess. Am I putting my money where my mouth is a lot of time? A lot of times, yeah. When I say buy Apple under 180 or at 180, do I think it's going to get back to 200? Absolutely. Am I saying buy at 200? No, because it's rejected off of 200 twice. So that's why you just guess. I mean, anybody that says this, they're just guessing. And a good example is TQQQ. You could trade TQQQ on a 5-minute chart. If we just go down to 5 minutes on here, you look for confirmation. And where do I see the confirmation? I mean, look at yesterday's afternoon can. We're going to cover this gap up to 50.13. It's close. It's already done it. Yesterday it was clear. 5-minute chart. Buy it down here at 49. You've got confirmation. And in pre-market, you've got confirmation as well. So there's nothing to it, but I will tell you how I get a lot of this. This education series is going to lead to that. You're going to be able to read Article 1, Part 1. You're going to be able to read Part 2. You're going to see the tools that I use, the descriptions that I do with charts. You're going to see Part 3. And you're going, at the end of this, it's going to be 5, maybe 6 complete things. And then we're going to start taking a look at charts. And we're going to say, how do I use the tools that I have to find stocks? How do I look at charts? Where am I going? That's what the educational series is on the paid newsletter. So what you just asked is exactly, I'm trying to teach that, but it comes from years of looking at charts. So don't think you're going to be able to do that overnight and just take a look at it. You can guess just like I do. I get it wrong sometimes, but it is what it is. William from Spotify. Gary, thanks so much for your detailed answer to my question. Really appreciate it. My question is about CPNG, pullback in East Asia stocks. CPNG. Is this Coupang? Yeah, this is the software, Supang. Or I think it's e-commerce. He's bullish on South Korea. Let's see. Coupang. What I have to kind of point out is I'm not anti this one, but that's a big PE. And it's gotten some hype. I know it's been, consumer cyclical, internet retail. You look at the downgrades, it's just the valuation is crazy. I do think, and I don't mean to say, hey, don't buy into this, but, this dude, 10% owner, they're selling at 15 and it's selling at 15. I mean, right now you could buy it at 15. It's got no confirmation. Algorithm makes you 7% versus losing 28% if you buy and hold. It's got, for me, there's nothing interesting in this one right now. Because even if I look at a long term, that valuation just tells me I think we're putting in some type of bottom, but I don't know where the bottom is. The bottom may be here in June 2022. you may see this go down to 10. But if Coupang it was one of those stocks, I think, that got a lot of retail interest, specifically when China was going stuff. But I mean, you got to buy on Seeking Alpha Analyst, a hold on the quant. You can see the valuation's D, momentum's D. It's just a downward trending stock. Ranked in industry, here, I'd rather see you go into Macy's. Honest to God, I think Macy's probably has a better chart if we just look at Macy's. And I know this is different because that's China, Asia retail. This is American retail. But Macy's, solid stock. I think this one gets back to 20. Not that you'd buy it now. Algorithm loses you 27%. Algorithm, buying and holding loses you 29% in this one. But you have some solid pops in this one. And when you're going down like this, and your MACD is going to start to change, and your RSI is going to change, and you're making money, and your PE is not crazy. It's 7. Your average target price is $17.38. You're trading right at 17. Wait for it to go down if you want to pop. And in the meantime, you're getting a nice dividend. Well, I don't think does Coupang have a dividend? Let's see. I don't think they do. No. So I think that's, William, probably, nothing gets me excited about retail anyway. Bullish bites. Hey, the stock with all the buys on Seeking Alpha, it's NTRA. Let's see. And I will read what Bullish Bites from Instagram said. They do non-invasive genetic testing. Natera offers non-invasive testing to discover results of an embryo. Please, pretty cool. I found them through meeting a random hedge fund guy at a bar. It was the top pick and one of the heaviest weighted stocks in their Alger Capital Growth Fund. Meeting a hedge fund dude at a bar, that's worse than listening to some douche on the internet. But let's see. NTRA, it's in a solid run. God, don't you wish you would have heard about this in November? And you get 77% run. Algorithm makes you 38% versus buying and holding makes you 6.4%. So from a standpoint of, hey, this one's just getting to the 200-day, if what you say, and they're super bullish on it, and we'll go over to Seeking Alpha because they did include a Seeking Alpha screenshot. But if you're bullish on this one, Natera, I mean, I can't, and let's see what Seeking Alpha says. NTRA, it's a buy. Here we go. Buy. I mean, it's got greens. The only thing is the valuation. Let's see. NTRA, it's probably the PE. Well, they're losing money. So they're losing $500 million. They have cash on hand of $7. They have about 120 million shares. What's 7.79 times 1.2 million?
It's 9,348,000.
So, yeah. They have 9 million. So they're losing about 500 million. They have 900 million. I would probably be worried about, what's 7.79 times 120 million? That's why my math was off. So they have 934. I was going to say, okay, so they have about 2 years of runway. What you have to worry about is, are they going to continue to get those upgrades? And are things going to continue in that upward mode? Your average target price is 74. You're trading at 67. Most recently, December, BTIG research said they moved it from 75 to 85. If we look at Natera and we go and we look at the quant, when did it get a buy? Has it been in a strong buy? It got a buy down here at $38 in October. At the end of October, it got moved from a hold to a buy, and you've been rewarded with that. So I like it. It's 35 out of 519 in their industry. Their industry is biotech. NKTX is the strongest buy in this one. Let's take a look at this one. Strong buy. I mean, NKTX, let's take a look at when it was a strong buy. Went from a buy here at $5 to a strong buy now. It's at $8, got all the way up to 10, so you doubled your money. This is why Seeking Alpha is so good, by the way. If you find one of these that's beaten down, you can just set yourself alert for when the quant rating changes. That's what I did. So I really, really like the Seeking Alpha Premium. But listen, I can't argue with a VP, a hedge fund VP at a bar. NTRA is bullish bites. Let's talk about scans real quick. We talked about at the beginning how Seeking Alpha has the Alpha Picks Club. The Alpha Picks Club is kind of like what I see here. This is a ProShares short, PSQ. This is the short of the QQQs. We got 2 levered ETFs. This is a ProShares, so it's triple levered. $9.61. You're down 0.84. You're $9.47 in pre-market. I would not buy these. I'm just giving you these as they are ones that cross up in my algorithm, and they show entries. And trading at the top of the Bollinger Bands here. We still have confirmation on the 4-hour. I said this. And trading at the top of the Bollinger Bands, that was way back here. This gets you in at 1372. Do I think we're going short? No, you have no confirmation here. This is SQQQ. If you wanted to short FANG, FNGD, this is a triple levered against the FANG. Facebook, Netflix, Google, things of that. $5.89. You are down 3% in pre-market. I would not buy into this. You have no confirmation. Again, I think we're seeing up days turn into down days, and down days turn into up days. So I think we're seeing that kind of back and forth. A couple of others that came up. NCLH, which is Norwegian Cruise Lines. People are cruising, can't get on cruises. The problem is the valuation in these. They took out over COVID. They took out a ton of debt. They issued a ton of new stocks. You have a MACD cross up. Look at how that just crossed down and how you're coming off the oversold of a 30 on the RSI. $17.08. Now, Norwegian and CLH over here on Finviz, $18 price target. They had a downgrade January 5th with an $18 price target. You're kind of in the middle here. Your 52-week low is 40. Your 52-week high is 22. You're down 14% year to date. We're only 18 days into the year, and you're down 14%. Last year, you made 9%. Now, the algorithm on this one makes you 1.9%. That sounds like a shitty, stock to get into. I'm not a big, hey, let's get into the cruise stuff. But if you bought and held this 24 months ago, you're down 22%. So that algorithm is actually pretty good. You do have some level of support down here at 16. I would wait to see if we have confirmation today. I think this one may go back to 19 or 20. I can't say that for sure because, again, it's expensive. You're losing $209 million. Your forward PE is 14. If you look at Royal Caribbean to compare it, RCH, I think it is. Let's see. RCL is Royal Caribbean. They're even more expensive. So Norwegian Cruise Line, let's see what Seeking Alpha says about Norwegian Cruise Line. NCLH. Quant has it as a hold. Everybody else has it a buy. It's 22 out of 38 in their sector, which is top hotels. Royal Caribbean, ironically, is the top one. This sector just doesn't get me excited in top hotels, resorts, and cruise lines. It's just, another one that crossed up, ironically, Hilton. We talked about how bad on the quant stuff. Hilton's the number 13 out of 38. The valuation is another crazy one here on Hilton. Hotels, PE of 37. Are they really growing that much? Average target price 176. You're trading at 183. You're at your 52-week highs. So if we go over here and we look at this one, it just crossed up. Is it continuing to go? You have confirmation. You totally have confirmation at $17. But are you getting into this one? I don't know. I mean, that MACD is a little high. The RSI is at 69. If you got in at 151, kudos. The algorithm hasn't gotten you out, even though you've seen these downturns. You're up 22%. Your earnings are coming up on February 7th. Now, where is everybody buying? If you bring it back, let's bring it back to the last earnings. We're going to bring it back to the day after the earnings. Where's everybody buying? They're buying up here. So you've got a floor of 177. You've also, if you break through 177, you're coming down to 171. And then if you break through that, you're coming down to 151. So there's just volume stacks that are going on in here. I wouldn't trade it. And then the only stock that came up in the S&P that crossed up was KDP, Keurig Dr. Pepper. And you're trading right around the 200-day right here. It's going to get a buy in here. It's not convincing to me. You're down 0.79. You got a gap up here at about 33. I think you probably get back there. Keurig Dr. Pepper. Let's take a look at the weekly on this one. You're just kind of, bouncing up against the 200-day at 33. So you can buy it at 31. I think it'll get back to 33. Let's see KDP in Seeking Alpha. KDP is it is a hold, a buy for Wall Street. The valuation is what's killing it. It is ranked 11 out of 14 in drinks. It's number one? Coke. I hold Coke. Coke is in the core portfolio. So you got everything there. If you have any questions, that's it for today. But if you have any questions, Linktree, linktr.ee/daily stock pick. Remember, I use Webull. I love Webull. So if you don't have a Webull account and you don't have the pleasure of using that app, throw a couple bucks into Webull. You get some free stocks if you use the link right here. I really, really do like it. Seeking Alpha, $50 off the premium service. I like that service. I really like, you see how I use it. I've gone over exactly how I use it. TrendSpider, you guys can use that link. You email me once you sign up, and I give you my algorithms. I give you the watch list. I give you the scanners, everything of that sort. The biggest one, I think, is the newsletter. Like I talked about, the educational series that I'm doing. It's getting a lot of positive feedback. If you don't want to pay for the newsletter, the least you can do is sign up for the free one. Sign up for the free one because I give you all these charts. So say someday you can't listen to an hour of the podcast. Well, my average read is about 5 minutes. So it takes 5 minutes to actually read through what I've said. Now, if you want to hear what I've said, typically it's in order. So you can just go down and kind of, fast forward through the podcast. Podcasts are all in video on YouTube. All of the socials are up here. You can get YouTube. You can get Spotify. You can join our private Facebook group where Sam is. Join Instagram. Join X or, Twitter, Vaz, Face, whichever one. So I'll be back tomorrow. Take care. Happy Thursday. Bye. Okay. Scott, let's see. Scott has been pounding the table on Progressive. I'm going to look. Progressive. Is it PGR? Let's see. Progressive Corp. I think it's, it's a PGR. That's a big financial, that's a big PE. But I can't argue with that stock. Oof. That has been great. Let's see. PGR. Let's go over here and look at PGR. And I'm the only reason I'm taking stuff out of the core portfolio is I think I've left it in there. I think the actual asset is broken. And that to me is kind of like, So here's Progressive. What's the price target on Progressive? 178. You're trading at 169. You're kind of at 52-week highs. Tough one to say get into. The valuation is an F. 12 out of 48 on the thing. Hold by strong sell on Monday, October 9th. Whoa. Okay, Monday, October 9th. This dude said strong sell. Monday, October 9th. Let's take a look where it was Monday, October 9th. Monday, October 9th, you were at 141, and the dude had a strong sell. Douche. Scott, you're better than that douche. Let's see what's number one. It's probably insurance, property and casualty insurance. AMZN. AMBC. That's a downward trending. I mean, you had a nice bounce, but AMBC. Everything's an A. But let's see how the stock trades here. So you had a nice bounce off this earnings. Wow, you went from 7 cents to $2. Now looks like you're probably going to cover this gap down to 15. But would I be worried about it? I wouldn't buy into it now. And this has a gap from, 2016. I mean, that's just long term, I wouldn't get into this one. But, yeah. Progressive, Scott, I think you're right in that insurance is probably good. Eli Lilly's down 2%. Tesla's probably up, I would think. No, they're down. SMCI is up 2%. Taiwan Semi's holding that 111. UNH breaking 500. Can we take a look at DFS? What is DFS for Pavin? Do Discovery. They reported, no, Pavin, don't think you're going to get a bounce up in this one. They reported earnings. The problem was bad debt. I'd rather see you in AXP on this one. And I probably wouldn't get into either, to be honest with you. I mean, both are pretty weak right now. AXP's earnings are coming up January 25th. I think into these earnings, you can see as we sold off last time after the earnings, I think you're going to see something similar to this. And so AXP, I would expect it to come down. And the reason I expect it to come down, we can look at DFS here in Seeking Alpha. It's the bad debt. The bad debt was horrible. Quant says hold. Wall Street says buy. Growth is D. It's 18 out of 37. They're saying it's credit card growth continues to benefit Discover Financial. They're writing off more and more bad debt. And so, it's a cheap credit card. It's got a little bit of a downward down cycle. How do I say it politely? Lower income than American Express card customers. Moneyline is the number one in the quant. But look, the quant just doesn't like this consumer finance sector at all. At all. Doesn't like him. So I'd probably stay away from that one as well. But, I'm a douche on the internet. Wow. Kroger, the business of groceries is just bad. I just don't think that the business of groceries, I mean, take a look at the long term on Kroger. It's kind of at its 200 day. And they've been buying, I think they've been buying other businesses. But, if you bought this at 41 in 2015, are you happy that now it's at 45 because you've held it through this bull run? I've got a Super Kroger, which is nice, fair restaurant, fair grocery store. It's got some good stuff, and I've got a really shitty Kroger here in Atlanta near me. Thanks, Mike. Mike's a big fan. KDP has been increasing dividends for 15 years. Pepper Cola is a millennial beverage. What time do I start recording the podcast? Usually I hop on Pavin about 8:30. And I'm usually here till at least 9:30, if not 10 o'clock. But I'm starting to get up earlier. I used to do it about 7, 8 o'clock. And then 8:30, there was too much financial data coming out. So my podcast was already dated by the time financial data came out. So I hop on at 8:30, I do some scans, and then I start recording. just depends who's kind of here. Yeah, I did some really good stuff this morning with the core portfolio, and it won't be on the podcast, but if you want to rewind and play it, let's see. I'll tell you. Let's see how much I'm up. Let me see my text real quick. She knows I'm on Do Not Disturb. She's not here. We'll do lunch on the 26th. Okay. Just looking at let me look at my stocks. I'm responding to texts. And that's boring for anybody to watch. But I'm going to get off here soon, probably in the next few minutes. Let's see. I am up. Apple's up 2%. So I am up. My portfolio is up 1.51%. And the NASDAQ is up 0.96. Yeah. It's a good day. Foofa. Yeah. I say this. I'll sign off, but I say this. And I'll go back to if you just tuned in and you're just listening and you don't want to go all the way back to listen to the beginning. This is, if it's not clear to you that we're in a channel right now, this is the channel that we're in. And until we break out, we're starting to break out above this at 411. If we break out and we hold above there, the direction is clear. But I think between now and the Fed March meeting, I think the bottom's about 400, maybe 395. And I think the top is about 410 here on the Qs. So, but we've clearly got a nice little rally going on the Qs. And it's led by the grade 8. These people who are telling you that the out of refills. Reply fill. There we go. These people that are telling you that grade 8 won't do this, won't outperform. I just don't see the 493 stocks. They may outperform the grade 8 this year, but I don't see them carrying the market. It's just my thing. And did you get into Boeing? Are you selling your Bank of America at 32 instead of waiting for it to go to 30? This 26% gain in financials. Bank of America actually, to be honest, it may come out of the core portfolio. I don't like the fact that they have to pay $2 billion every quarter for the insurance. So, yeah. Okay. I'm going to go. I'm going to sign off. Pavan, everybody, thank you guys for tuning in. Let's see. Just read the filing. DWAC, here's the thing I have about DWAC. Political stuff aside, they are expensive as F, and it was so shoddily put together as a corporation. It's a shell company. It says it right there. It's a shell company. This is a hype trade, Roblox. It is nothing more than that. They are losing $25 million. More than likely, if they start putting more money into it, they will lose more than that. They only have 9 cents per share. And it's 30 million shares floated. They will dilute you just like Plug just did. They have nobody covering them. It's a shell company. They basically don't have any direction whatsoever. When you look at DWAC over here in Seeking Alpha, this is political stuff aside. Again, political stuff aside. Strong sell. They don't even rate it. It is just a bad formed company. Doesn't mean you may not go to 60. Doesn't mean that, you can't. It's just hype. And I'd hate for you to be sitting here in this stock if you have a gain. Again, 1 year, you're up 44%. 5 year, you just started, so it's not 5 year. But year to date, you're doing great. You're up 43% year to date. Versus SPY, we'll just chart against SPY. It's crazy. SPY is up 18% over 1 year. You're up 32% in DWAC. Look, SPY, you're down 0.64%. DWAC, great trade. Just understand what if they hold above 30 and hold for 20 consecutive days, and they have about 40 days to do it, that raise more money for more capital. The problem is if they raise more money for capital, they're going to dilute you. So the way that works is they're going to, right now, they have 30 million shares floated, right? 30 million shares at, 0.75 cents is what you're kind of getting. Say they have a market cap of 925 million. So it's about, it's actually worth, book value? $6.63. They're just going to add more shares. So this will go to 60. The market cap doesn't go up. This just goes to 60 million. The market cap doesn't go up. They're just going to sell more shares. They sell you 30 million more shares. But does that double their market cap? Nope. They just create shares. And so that means that stock that you had is all of a sudden, if they do 30 million more shares, that stock is worth 50 cents rather than being worth $1. So I'd hate for you to get stuck in it. I think it probably will go to 30. I don't think that you should not trade this one if you like it. That is a 100% just, listen, go and trade it. Trade it on a 5-minute. Look at this one on a 5-minute chart. You know what? That my 65-minute algorithm, by the way, on this one, 65-minute algorithm has you out right now. You just got out of it with a 37% gain. It got you in right here at 16. Got you out up here at about 24. So, but it has you out. I'd be super, super worried about this one. But Roblox Gamer, I don't want to tell you do not buy it. I just think you should trade it instead of actually owning it, because trading it will make you money. Owning it will make you lose money. And that's just shown by here. That's just the chart. Owning this will lose you money. Trading it will not, but owning this will lose you money. So it could go to 30. This is all Trump hype. And he's very good at it. Look at, he's still releasing NFTs. Nobody's releasing NFTs, but Trump is releasing them. So he's really good at that stuff. So, okay. I am out of here. I'll talk to you guys.